When Bitcoin is a crypto asset network. Basically, the idea is let's form a bank in cyberspace with 21 million units. Let's all buy the units and let's make it impossible for a CEO or a company or a government to dilute the number of units. So let's put it outside of the control of humanity. So Bitcoin is that bank in cyberspace. The value of a Bitcoin is kind of equal to the book value of the money invested in the network, adjusted up for inflation, divided by 21 million. That's the way to think about Bitcoin. Well, when it was $1 billion, it was an experiment. When it's 50 billion, it was scary as heck. We didn't know if it was going to be banned, copied, cloned, or whatever. When it got to 200 billion in March of last year, it became pretty clear that it wasn't going away. And that's the point at which I got involved, because I said to myself, I never seen a $200 billion digital network that ever got displaced. Like once you get to that point, you've got escape velocity. Today, Bitcoin is $1 trillion bank in cyberspace, and it's got more than 100 million depositors. It's got thousands and thousands of companies plugged into it. It is the fastest digital network to grow to $1 trillion in market value in the history of the world. It took Amazon 24 years, Google 22 years, Apple 42 years, Microsoft 44 years, Bitcoin 12 years. Okay, so Bitcoin is a monetary network. Facebook is a social network. It's not getting displaced. When $1 trillion worth of capital adopts that as their monetary network, it is clearly past that first stage of ridicule craziness. It's now gotten to the point where it's providing a role as a store of value in a world that probably needs to store 100 to 200 trillion dollars of value. So in my mind, there's no doubt the next stop is it flips gold, because gold is 10 trillion of dead money that we just wanted to park in a vault as a store of value, and Bitcoin's better than that. And it's clearly being promoted in the past few weeks. Look, Kathy Wood just said, the old 60-40 portfolio doesn't make sense. How about 60% equity, 20% bonds, 20% Bitcoin? Whoa, that just happened a week ago. Now you have Morgan Stanley, JP Morgan, Citigroup, all talking about Bitcoin in the past few weeks. It's clearly moving. I believe it's moving into the year one of institutional mainstream adoption, like February 8th, when Tesla came out and announced they bought $1.5 billion of Bitcoin. That was the starting of the gun of mainstream. March of last year was the first year, zero year. Like if you're crazy and you want to take a risk, you buy Bitcoin, and you had 1 year to be very early. This is year one of this is a reasonable solution. You just saw the CEO of New York Life join the board of NYDIG. They have $700 billion. He's the sitting CEO currently of New York Life. $700 billion of assets under management. The insurance industry has $7 trillion on their balance sheet. NYDIG announced that insurance companies have $1 billion of Bitcoin exposure. 3 months ago, crickets. Okay, so what happens over the next 36 months? Well, this is really the evolution. But until Bitcoin gets to 20, 30 billion, I don't think we're getting into the more mature area of the curve. I think it's going to sprint to the $20 trillion level, because that would just be 2x gold.